Hi, everyone. This is Rohit from Lifestyle Mastery. I'm excited to have Kevin McArdle, who's the founder and CEO of SureSwift Capital, a private equity firm that buys and builds SaaS companies. SureSwift Capital gives dream access to SaaS founders and through their uniquely entrepreneurial approach. A few of the companies include Charge, Stripe, MySite Auditor, and many more. Welcome to the show, Kevin.
Thank you very much. Happy to be here.
Awesome. You got into the corporate world, and you're now running SureSwift Capital. How did you get into private equity?
Well, I had a nice long career in corporate America, and I realized a couple of things. One, I was getting a little bit bored and a little bit frustrated, and I had went to business school along the way and realized that the people creating great wealth for themselves weren't comic book superheroes. They were just, people that were, smart and willing to work hard and had a good idea. And so I had always sort of dreamed of owning my own business. And then, that coupled with being a little bit burnt out on corporate America, ended up having the opportunity to start what now is SureSwift with a business partner. And it was a pretty easy decision at the time, just given that had always been a goal of mine. And the opportunity presented itself, and I was ready. They say fortune favors the prepared mind, and I had been sort of preparing myself to leap out of corporate America for a long time. So that's how I ended up in what is technically private equity, but I didn't even think of it as that at the time. It was just sort of like, we're going to pool some money and buy some successful businesses. And yes, technically private equity, but we didn't even really label it that at the time.
Got it. So when you started, was it more like putting in your own capital and buying those SaaS businesses?
Yeah, it was myself and 4 partners just pooling our own capital. The other 4 are more passive investor types, and I'm the active one managing the portfolio. So they put in more capital than me, but yeah, we pooled money together and just started buying successful online businesses.
Got it. And how did you go about finding such, SaaS founders whom you could, buy the SaaS companies from?
Well, pretty early, I found that there was a fairly robust broker network of people who specialized in online businesses. And a lot of your listeners will probably, now be familiar with that same thing. But at the early stages of the business, I didn't realize that was out there. And so that gives you the opportunity to join a bunch of email lists and see a bunch of deals. Over time, we've had more success connecting with founders more directly, either in online or in-person events where people tend to congregate and share ideas and try to help one another succeed. And over the course of almost 7 years now, we've built up a reputation where when somebody decides they want to sell a business, they typically know how to find us, or if they do a little bit of searching of like who might buy a SaaS business, we typically will show up in that search and people will reach out to us directly. So we rely way less on brokers today than we did in the early days, but the brokers at least gave us a path and a funnel to start looking at a lot of deals and making acquisitions where it felt like a fit.
Got it. And when you started off, did you focus only on bootstrap SaaS companies, or were you also focusing on direct to consumer and e-commerce companies as well?
We just focused on profitable businesses. So therefore, we looked at a heck of a lot of different things. We zeroed in quickly on bootstrap businesses because through conversations with founders, it happened 2 times pretty early where myself and the founder had agreed upon a price and a deal that we both felt good about, but then the deal got blocked by a minority ownership angel investor. And so we now communicate and talk to bootstrappers primarily. It's not a hard and fast rule. If there are investors on one's cap table, we're not going to walk away from that. I just learned you got to pretty quickly get to ask the question of who gets to make this decision. And, do we need to be talking to all investors at once, or can the founder really chart their own path and make their own decision?
Got it. And, since you've bought, a bunch of companies in the last couple of years, do you also keep the operators in the company, or once you buy the company, do you let the owners go separate ways?
Yeah, it has happened a few times where the seller of a business or the founder will stick around and join our team. Most of the time, though, when a founder finds SureSwift and they're ready to sell, it's because they want to move on to something else, either a new project or they just want to, take some time away from their business. So it's the rare occurrence when the founder sticks around and joins our team. Usually, we ask them to help transition a business for 3 to 6 months, and then by that time, we've had enough time and opportunity to hire somebody to replace them. And we have, a good handle on the business, and we part ways and just remain long distance friends. So some of my favorite people in real life and online are those who have sold to us, and we continue to just kind of stay friends and celebrate one another's success.
Well, that's so interesting. And what are some of the requirements that a bootstrap company founders need to fulfill in order to qualify for SureSwift Capital?
Yeah, we like typically businesses that have annual recurring revenue of at least $250,000 and up from there. We've just found that businesses that aren't quite at that level maybe need a little bit more attention than we can give them, and maybe haven't really proven their long-term sustainability in their given market. And then beyond that, we only buy profitable businesses. We don't buy businesses that are break even or burning cash. Not that there's anything wrong with those things. That's just not our model. And then the criteria get further refined from there. We're focused on business to business SaaS. And then beyond that, we have a very wide open funnel in terms of like the businesses we're interested in. Like we don't have to focus on a specific business niche or industry. We are sort of tech stack agnostic. We've bought businesses with all different types of tech stacks. So pretty broad base once you get through those first few filtering criteria of size, profitability, and B2B SaaS.
And what is your SaaS company buying process? How do you go about how much time does it take for you to contact and buy the company?
It depends on the seller and the business. So I know some people that buy businesses like us pride themselves on, we'll make a decision in a week and close within 30 days. I just think that's not very smart, to hold yourself to that commitment, because a lot of founders aren't ready to move that fast. And a lot of businesses require a little bit more diligence than you could possibly do in a week. So we let a deal take as long as it needs to take. The fastest we've ever closed on something from first introduction to closing was 2 weeks, which was pretty fast, but the seller was motivated to sell and we were motivated to buy. And in that case, it was a relatively straightforward business. But that's definitely the exception to the rule. Typically, it would be 2 to 3 months from the time that we have a first introduction to a founder until we're closing on a business. And that generally is enough time. But if a founder needs more time to make a good decision, then we're not going to rush the process.
And do you get to decide, how many businesses are you going to buy in a particular quarter or in a year? What is the decision-making process when it comes to buying businesses?
We don't put limits and we don't set quotas. So by that, I mean, we don't enter a year saying we have to buy X number of businesses. If there aren't great businesses to buy, we don't force ourselves to make acquisitions. Functionally and operationally, we can probably close on a business about once a month, and not probably, we have done that pace, generally speaking, over, the course of 7 years, we've bought 46 businesses. And there were times where that was faster or slower, but our team has gotten really good at transitioning businesses into our control. And if we do that about once a month, that's a pace that we can keep up with. More than that starts to feel a little bit aggressive and might put too much tax on the team. So, but we don't, if we go 2-3 months without closing a business, that's fine, because that just means we haven't found businesses that we want to own forever in that period of time.
And has there been instances where you've bought a company and then sold it off to some other buyer?
There have been a few instances like that. I mentioned we started off just looking for profitable online businesses, And that got us into a whole lot of categories. Content sites that made money through ads, membership sites, a little bit of e-commerce, et cetera, et cetera. And as we started to focus more and more on SaaS over the last 5 years, we've decided to sell off some of those businesses that weren't a strategic fit for us. We've had times where a strategic buyer will approach us and say, hey, I'd like this business and it's worth more to me than it is to you. And so we'll go and do that deal. And there's other times where we just sold a business because it didn't quite work out how we expected. And it ended up being, not making much money, and it was just started to become a distraction. So for a lot of reasons, we have sold businesses, but in general, it is not our model to, what you might call flip businesses, like buy it, try to double the value, and then sell it to the next, highest bidder. We much prefer buy and hold when it's a business that is in the software space and something that we want to own forever.
And when it comes to SaaS businesses, are there any sectors or any niches which you feel are highly profitable and highly scalable, and it really fits into the mold of SureSwift Capital?
Yeah, well, we've got several businesses that are in the Shopify ecosystem. So, no surprise, most of the world is pretty bullish on Shopify, and so we're no different. But we're buying the software apps that service Shopify store owners. So we do have a collection of, I think at this point, 6 or 7 businesses in that ecosystem. We have a handful in the sort of process automation space where, you can sell to enterprises and, things that deal with email and documents, where basically the addressable market is the world, because everybody deals with email and documents. Yeah. So we're pretty bullish on that space. But beyond that, we don't focus on a specific sector. If something passes our filtering criteria that I already talked about, then we're in. And there's no sectors that we rule out, other than sort of like adult categories or anything, dealing with weapons and things like that. If it's software servicing businesses, mainly small and medium businesses, then we're generally interested.
Interesting. And, what do you think are the best ways to use the profits of a company to fund growth and acquisition?
Sorry, use the profits to fund the growth of an acquisition? Is that what you asked?
To fund organic growth and acquisition of more businesses.
Mm-hmm. So the way that we think about it is, if we buy profitable businesses, that the profits probably are enough to grow the given business, and they can probably contribute to the war chest to acquire more businesses. And something that is, somewhat obvious, but not everybody takes this approach. It's way easier to grow a business that's already growing before you buy it, rather than focus on turnarounds. And so, I'm very much a believer in sort of like portfolio theory, where, if you put enough chips on the table, then, some businesses won't work out, but hopefully enough will, that the profits can be pooled together. And, if we do our jobs right, then the profits from the overall portfolio should be able to fund future acquisitions.
Got it. And what are some of the metrics you look for in a SaaS business?
Well, the normal things that you would hear from anybody in terms of like what they focus on operating their business. So, top line growth, profit margins, churn is obviously a very important thing. Look at the entire funnel of customer acquisition. How many customers do we get to the website? How many do we convert to a free trial? How many do we convert of those to a paid customer? What's the lifetime value of those customers? So there isn't any like magic to the things that we look at. And I should note that there isn't one size fits all. So in our space, I've already mentioned, we've got Shopify apps, we've got process automation stuff, we've got time and attendance software, all sorts of different niches in our portfolio. We've got a growing portfolio of fintech type businesses. And I have learned that to just say a blanket number, like we look for 3% churn, that's too specific, because the churn in the Shopify space is going to be very different than the churn in the fintech space, which is very different than the process automation space. And so when we are in an industry, we try to understand that industry very closely. And every one of our portfolio companies, we look at churn and focus clearly on churn as an example. But what is acceptable churn and what is not varies by industry. And what is the ultimate goal for churn of a given portfolio company is based on that company's history and the industry that it serves.
Got it. And in the initial terms, you had not raised a fund to scale up, but have you decided to raise money for a fund right now?
Mm-hmm. Yeah, we're actively deploying a fund right now. So I mentioned it was myself and 4 partners that capitalized the company for the early days, and that lasted for probably first 4 or 5 years that that SureSwift has been around. And then we realized we're pretty good at this, and our partnership group was running out of our ability to keep capitalizing on the opportunity that we saw. And a whole lot of people that I got to meet over the years were like, hey, this is a really cool idea. Can I invest in this thing? So about early 2020, we raised our first fund from outside investors, and we ended up with 67 different individuals contributing to that.
Okay. And are there, can a non-accredited investor also invest into your fund, or is it only accredited investors who can invest?
Only accredited investors at this time. We looked at some of the different platforms to raise from non-accredited investors, and just the sort of complexity of that balanced against, like, we had enough interest from accredited investors, both individuals and institutions, that we just stuck with that to keep things simple on our side.
Got it. And how do you make sure that you are able to make money for investors? Do you have to give a dividend back to the investors because you're buying profitable SaaS companies?
Yeah, that's right. So unlike a lot of private equity firms, because our attitude is buy and hold, there is no plan to deploy the fund and then grow the fund and then liquidate the fund over time. So because there isn't that long-term liquidation target or goal, we actually distribute some of the profits from the portfolio to investors every month. So they give us their capital, and we start distributing profits monthly. And if we do our jobs right, they'll eventually have all their capital back over a period of years and still own a slice of profitable, growing SaaS companies.
And Kevin, do you think that is there any common theme in acquisitions in the last couple of years you found?
Theme for our acquisitions?
That's right.
Not really. I mean, well, like, other than the things I said, like, we only buy profitable things. There's a selection bias. Like, what is common of our acquisitions are that, well, it's the things that we look for. They're profitable, they're growing, they're B2B SaaS. And another sort of aspect that I've learned over the years is that there's no, and this it's probably obvious, but no 2 deals are the same, because no 2 founders are the same. People sell for a whole lot of different reasons. And only one of them is because they want money. There are a whole lot of other reasons why people sell businesses, that, they might be having a baby. They might unfortunately be facing an illness, or an illness of a spouse or partner. Business partners occasionally have conflict about what should happen with the business. And one way to resolve conflict is to just sell it. And so, other than the things that we look for, which we've discussed, every business has its own story, because every founder has his or her own story of how they built the business and how that overlaps with their life.
All right. And, there'll be a lot of platforms like MicroAcquire and a few other marketplaces which helps you buy, smaller SaaS companies or e-commerce companies. But this is for listeners who want to buy micro SaaS companies or projects. What are some of the questions they need to ask if they're talking to a professional business buyer or somebody who wants to sell their business? Is there are there any questions they should be aware about?
Yeah, I really appreciate you asking that question. I'm a big fan of MicroAcquire, which you mentioned. Andrew Gazdecki is an investor in our fund. We are an investor in MicroAcquire. I think it's great for founders to have, and it's not the first platform or marketplace that existed for people to sell. I just think Andrew has a great approach to how he's going about it. I do see, like you would have in any marketplace, varying degrees of professionalism being exhibited. And so on the seller side, let's start there. We are very upfront with people about who we are, what our process is, what our experience is. We've acquired 40 plus businesses in 7 years, so we know what works and what doesn't. And we are very opinionated about how the process should work, because odds are we've bought more businesses than somebody else has ever sold. And so we have a approach to due diligence. We have approach to letters of intent. We have approach to closing that is totally fair and respectful of a seller. But we've learned what works and what doesn't, and so we take that approach. So for a seller, I would look for that. And might sound self-serving for me to say this, but experience is important. If you're selling to somebody who's never done it before, that's okay. If they're the right buyer for your business, you shouldn't run away from that, because many people only have the opportunity to acquire one business and then they run it. And not everybody has a portfolio approach like we do. And it's just, you need to be aware of what you're walking into, that if both seller and buyer are inexperienced, it could be a rocky road, or you might want to get different help and advice to kind of shepherd the process. From a buyer's perspective, the biggest kind of tip I can give people is look for, honesty and integrity and transparency from a seller. We have learned, and we have a very firm process in place at SureSwift. If we ever start to question a seller's integrity, or we think they're misleading us or lying to us, we just walk away from the deal. No questions asked, because no matter how good things might look, if we question somebody's honesty, then that probably bleeds into how they've built their business and how they treat their team and their customers. And we don't want any part of that. So I would just say that's my general best tip for a buyer is you have to feel good about the seller. Even if the person's not going to stick around with the business, you want to feel like you would want to work with that person over time, because businesses take on the personality of their founders, for better and for worse. So if you have concerns about the seller of a business, you're probably going to uncover concerns about their business over time.
I think that is great advice, because a seller needs to be honest, and it does take a bit of a time to get the trust in for the buyer to buy the product, buy the business. And I wanted to understand, what is one thing you wish you had known about, or while you were scaling, and you wanted to understand about how to build a culture in the company?
Well, I think I benefited from my time in corporate America from having the ability to lead large teams, grow teams from scratch, think about how to build culture among a team. What I think I underestimated early on was there's this notion that certain online businesses can be sort of passive income. And I learned pretty quickly that there is no such thing as passive income. Even a business that has sort of embraced the dream of Tim Ferriss's 4-hour work week. Every business needs care and feeding, no matter how passive it may appear. And there were times where we weren't as successful with businesses because we didn't put enough great, smart people on the business early enough and consistently enough. So I wish I would have gone in having learned that lesson already.
Got it. And can we also run an online community, the Founders Summit? Can you talk more about how you went about building a community for SaaS founders?
Yeah, I'm a huge. I get really excited talking about Founder Summit for a lot of reasons. But the quick story there is we bought a business from a guy named Tyler Tringus. His business was Store Mapper, and he's a proficient blogger. So anybody that wants to hear the whole story behind that can go read Tyler's blog. And then Tyler went on. We closed on his business. Typical story. He helped us for 6 months, and then he moved on to his next thing. And after a couple of twists, his next thing ended up being running a fund, which is now called Calm Company Fund. And he invests, the tagline is funding for bootstrappers. So he wants to invest early in businesses to give founders a better chance of success with no expectation that they raise future money. It's just, let's help one another build a profitable business. And so I love the idea. I helped him sort of build out the early notions of what that might look like. And SureSwift was the first and biggest investor in that new venture for Tyler. Over a course of, let's say about a year, Tyler had invested in 14 or 15 companies. And we, in addition to SureSwift, there were 60 or 70 investors in that fund, most of whom were Bootstrapped SaaS founders themselves. And not only were they investors, but they were active mentors for the portfolio companies. And at one point, Tyler and I were catching up via phone, and this whole thing is completely remote. Like, nobody's met face to face. I've got a remote company. Tyler builds remote companies. Most of the investors are also building remote companies. And we were talking and thinking like, man, it would be really cool to get this group together in person, both the portfolio company founders and the investors. And they were like, wow, it's a really cool group of people. I bet others would like to attend that thing. And we were like, yeah, let's just make it an event, and not exclusive to this portfolio and the investors, but kind of centered around that group of people, and this notion of you can build successful, profitable, potentially remote companies in a way that isn't the growth at all costs sort of typical VC mindset. And so we had a wonderful plan to get about 120 founders together in Mexico City on March 15th of 2020. And you and your listeners will probably remember that week, at least in North America. I think the UK was a little bit ahead of the curve, but that was when COVID basically started shutting everything in the world down, certainly in North America. And so that conference did not happen. We had about 40 people show up early and just kind of hang out in Mexico City. But we canceled the event due to COVID concerns. And so just recently in October of this year, 2021, we were able to reset the event, host about 140 founders and about another 10 to 15 plus ones, spouses, partners, friends in Mexico City for an amazing event. And in the interim, since we couldn't hold the event, we said, let's pivot this into an online community. So we've got up to 500 founders active in a Slack channel and, communicating on a 24/7, 365 basis. And like I said, just recently we were able to reset on the in-person event. So it's a great community that people describe as low ego, but super supportive of one another, and people just kind of getting together to try to improve our lives and build better businesses together and support one another. So that's Founder Summit.
I think that's super interesting. I'd heard about Tyler from Earnest Capital. I don't know, it's renamed as Calm Fund, but
they recently rebranded because apparently somebody had a trademark on Earnest Capital that he didn't uncover early in the. But so same concept, same company, just recently rebranded.
All right, we'll put that in the show notes. And Kevin, I quickly want to do the top three. What's your favorite business book?
I have several. But one that I recently reread that pops to mind is Let My People Go Surfing. It's written by the founder and CEO of Patagonia. And I love his approach to balancing life and work. And obviously they've built an amazing, huge, very successful company. And it seems that they've done so with really strong values and treating people really well. And of course, Patagonia treating the environment in which they operate really well. So that's one of my favorites.
I read the book and I'm a big fan of what they are doing. We'll put that in the show notes. And Ken, if you could go back in time when you started building SureSwift Capital, what is the one thing you would have focused on or done anything differently?
If I could start over, I wish we would have focused on SaaS right from the get-go and not been distracted by too many different business models. And the reason for that is just like, I really love software. It's where my experience lay. My experience in corporate America was at a software company. And so I wish we would have found that earlier. That said, like part of and everybody's story is the experiences that they have. So it's also possible I needed to experience, content and membership and e-commerce before realizing that SaaS was the right fit for me.
Interesting. And do you have any favorite online tool, for example, Gmail, Slack, Zoom?
Well, it's hard to not be a fan of Zoom, given how prevalent it is in our lives. But actually, the tool, if I were to actually pay attention to the screen time of my phone, probably Slack is the most important in running our business. We are, I think I mentioned, we're a remote first team. At this point in November of 2021, 150 people around the world in 14 time zones in 30 countries. So we operate in a very asynchronous manner. And I am able to keep an eye on every portfolio company and communicate with my team around the world via Slack in a way that's convenient for everybody's life and not upsetting the life-work balance that we care deeply about. And the tool that really helps us do that the best is Slack.
Got it. We'll put that in the show notes. And Kevin, what is the best way people can reach out to you and know more about SureSwift Capital?
Yeah, if you want to know about SureSwift Capital, we have a newsletter that goes out the first of the month, every month without exception. And we just try to share what we know and help founders, grow their businesses and live better lives to whatever degree we can. And so if you go to SureSwiftCapital.com, you'll see a pop-up to join our newsletter. If you want to connect with me, Twitter is the best place to do that. I'm Kevin_McArdle on Twitter. And I love interacting with founders and entrepreneurs of all backgrounds and all stages of business, and just hearing people's stories and like I said, learning from one another and trying to help one another succeed.
Absolutely. We'll put that in the show notes. Kevin, thank you so much for taking your time speaking to us. I really enjoyed my conversation with you.
I enjoyed it too. Thanks a lot, Rohit.